Yo, what's up, everybody? All right, so this is Big Sal Trades here. So I do have another video. It's longer, it's more in depth. It really goes through kind of my mind and my process when using this strategy. I'm using like a modified version of ICC, which is market structure, impulse correction continuation, or indication correction continuation. If you are watching trades by SI and you still haven't figured things out and you're trying to find a way, um, I'll share with you with what's working for me, and I'm pretty confident that it could possibly help you. All right, so today let's go ahead and go over kind of some numbers here. So this is what happened today. Today I won. Looks like we're up 210. I did take a few trades here, so I'll show you exactly how they played out. So I won $535, lost $291. This was really break even, so that doesn't really count. And then last night before I went to bed, this one right here, I lost this shorter play at 143. That would have been, I'm telling you, if this would have played out, this would have been about $1,200, and I only risked 143. Unfortunately, it didn't play out. Let's go ahead and hop on the charts real quick. This is the trade that I took today, and I won. My stop loss was somewhere around there. It may have been a little bit lower, but overall, this was the continuation, right? So if you look here, we've got an impulse, correction, continuation, and that was it, right? So my whole plan is once I see it pulling back, so I see the impulse down, right, which is the breakout. So this is the breakout, this move down. And then after the breakout happens, which I have an alert set, so that way I know, okay, it's breaking out, but I do nothing. I just look, I'm like, okay, great. And then I'm waiting for it to pull back. So then I put an alert usually a little higher. So if it does pull back, it hits my alert. It just keeps me watching the trade, and I get a good idea of what phase we're in, right? And then last night, so last night was around this area right here. This is where I got in, and you see price pulls down and then kind of pulled up and stopped me out. All right, so it was a little strange, and I have I have a video that I shot beforehand where I'm like in the trade and stuff, and it's live and you can see it. So I may just post that right after this video, and I think there's a lot to learn there. But pretty much that's why I lost the money, or lost the trade, right? Because price kind of pulled up against me, and I was thinking that, okay, maybe the pullback was going to be right here. That's what I was thinking. All right, so pullback ended up being at this level. You can see there's a 1 hour level right here, support resistance level right here. Price comes up, gets above it, comes back down, kind of stays right around it, and then price pushes back down. So this was the level. And I'll tell you what, most of the times when I'm losing, it's because of an error. And I would call this an error because I didn't, I was expecting price to move at this point in time just because I'm watching it. But I know for a lot of us, we don't really know when it's going to pull back. And what I've kind of developed is just watching the candlesticks on the 5 and the 15 minute. The 15 minute is more reliable, but let's look at the 15 minute here. I'm just going to follow this. I'm going to trace this. You can see that this was the pullback and then the continuation down. I'll just delete that for now. Check this out. So let's go ahead and follow this. So price is down here. It had its indication, right? And then let's just follow it, right? So we'll do the high, the low, the high, the low, the high, the low. Right now, everything is higher highs and higher lows, right? The high, the low, the high, the low. And then at this point right here, if you're looking at the pivot point, we've got one right here and we've got one right here. So because we're looking for the prior swing low, once we break the prior swing low, because we're trying to go down, right, back down to this level, it wouldn't be this pivot, but it would be the second one, which would be this one right here. Once price gets below that level, then I know I'm feeling really confident that we're ready to go, but it didn't. And I ended up getting in here. I was doing a little experimentation with a fair value gap play. I've won that before, where I look for a fair value gap on the 1 minute or the 5 minute, and then my risk to reward is huge. Okay, but that's neither here nor there. So looking at this, there's some consolidation here. I need to check because I think I may have gotten in somewhere right around here at this level. Oh no, I didn't. That's 4:30 a.m. So yeah, it was right here, this level. When the price came down here, and that's where I got stopped out. Okay, so if you're looking at this once again, we're still in an uptrend. We did have a moment here. I wouldn't have counted that. I think I put that pivot point too low. Let's just finish this off really quick. And then we've got this move. Okay, so I'll stop that. This pivot point, look, it should have been right there. So we're using the bodies. If you're looking at this, you can tell that we're in a clear uptrend, right? So I'll click on everything so you can see the actual little circles right here, which I'm calling the pivot points. So you can see that we got a higher high. The low is higher than that previous low. This high is higher. So if it's higher or equal, it still counts in the direction that it's going. So we've got a higher high, higher low, higher high, higher low, higher high, higher low, higher low, higher low. And most important are the lows. On an uptrend, I just want to make sure the lows are getting higher. Even if one of these highs is lower than the previous high, it's more important to me that the lows are rising, right? And then the moment that it breaks the low, this is a break of structure for me, right? Because it broke that low pivot point. And then that's where I'm paying attention, because I'm like, okay, it's go time. That's where we want to get in. And this blue area right here is New York session for me. So this is a start New York session. That's 6:30. Right here is when New York opens, this big candle that pushes down. And if you look at it from this point, now we're making a lower low, a lower high, a lower low. Then we made a higher high. So this is where I lost a trade, right? And then I just waited at that point. Just waited, let it kind of play out. And we're on the 15-minute. And we've got a high, higher low, higher high, right? That's where it got a little tricky, because the price dropped down and then it moved back up. And this wasn't really clean. This is like kind of a Trump market type thing, right? And then price started coming down. So at this point, I was out the market. I was like, I'm done for the day. But then once I saw it get below this level right here, I was like, oh yeah, that's definitely going to play out, right? Because if you go back to the 1 hour, let's go ahead and get rid of these pivot points. Look at the 1 hour, how clean that looks. On the 1 hour, you don't see all that noise. Usually the 15-minute is clean enough, but it wasn't today. All right, so you got higher high, higher low, and then all of a sudden you get a lower low, lower high, lower low, lower high, so on and so forth, right? That looks clean. The 1 hour looks clean. So I probably should have just maybe chilled on the 1 hour and just watched price. It was tricky today because, like I said, usually this is where I would have gotten in and I didn't get in here. So if I was up at 6 a.m. ready to trade, I would have just gotten in here. But let's take a look at that again. That was a huge candle. Yeah, okay, so this would have been the optimal entry, maybe something like this. Something like that, or even while this candle is forming here, just getting in and then holding all the way down here to this level. That would have been a 1 to 4. That would have been a beautiful trade. Beautiful trade. So if I do a create limit order, and then risk about 260, that would have been a $1,200 gain today, and I'd be up 51,000 and some change, right? So I'd be maybe close to halfway to my profit target of 53,000 and some change. Okay, so that's where I could have improved. Because that didn't happen, like I said, I got in right around here because I used this level, and then it went against me, which was really weird. The whole market was weird this morning, and then once it kind of worked its thing out, then it started to move down really nicely. All right, so that was today's play, and right now I'm up $50,101. If we look at TradeZella here, you can see we just started the week out okay. We lost 144 yesterday in the same trade, and then 210. So I need to be a little bit more cautious with getting in or too early at the wrong time. And I think a good way to combat that is to just be a little bit more patient and just wait. And if it plays out and it's too late, then it's okay. But I may still have time. So I just need to just wait and let the candles kind of show themselves. The other thing that I'm working on too is I'm going to review all the past trades on the chart, everything that played out on the charts, and just kind of get a good idea of what levels they're rejecting on, maybe on the 1 hour, and see if I can find a consistent area of interest. So if I can find a consistent area of interest, then that will help. A lot of times I'll use the Fibonacci. Let's see. So this Fibonacci, I put that a little too high right there. So from the start of the move, I do the wick to the bottom of the move, the bottom wick, and that right there, for me, let me know that, okay, price could pull back to that level. So that did work, and that could have been a good place to mark my area of interest. So I'll go back on the chart here, and I suggest you guys do that too. Or when you notice that you're having some issues with your trading and you figure it out just like I did, right? My specific issue was getting in on the turnaround, and you saw it faked me out, probably faked other people out too right down here. Looked like it was ready to push down, and then this was a fake out and I lost money right here, right? And then the second go around, it came back, and then I was good. I got in after it got below that level for 551. And I also scaled. I put in 3 contracts, and then I added another contract right here on this red candle right here, the small red. No, it wasn't small, but there you go. On this red candle right here, I added another contract just because I felt confident in the move. I had been watching it for 12 hours the night before. So, and it was really clean as far as the distance. I definitely like that. And also another key thing is, you see I've got the highs. Let's go back to the 1 hour. I've got the lower highs marked out, right? There's a lower high, lower high, lower high. So as long as it's below this level, not above, then this is still fair game. Had this thing pulled back up here, I would have been out. I would have been looking for an indication to the upside. All right, so I hope that helped you guys. That was me using market structure, or ICC, on the 1 hour time frame, and also for an intraday play. So that way you can get your money within a few hours before the session ends, and rinse and repeat. All right, if you guys have any questions, please post them below, and give me a thumbs up and a subscribe if you enjoyed this content. It motivates me, lets me know that you guys are feeling this. And if you have any other content ideas, just post them below. All right, y'all. Peace.